All right. Today is Tuesday, October 12th. This is a recap for the stock market activities today. In focus tonight, we're going to talk about the Fed waving the white flag, finally, that inflation is not transitory. And then we're going to talk about the Southwest fiasco, an update. And lastly, the upcoming war against meat and cow farts. You know this thing we call inflation? Well, according to the Fed, it is imaginary. And if it's not imaginary, it is transitory. Like herpes, it comes and it goes. A little bit of itch, no problems. It goes away. The problem is, it didn't go away, and the itching is getting more intense by the day. And the only remedy left is to rip it off. And by it, I mean your lips, not the other thing. That's not my problem. And now inflation is raging out of control. And suddenly inflation is visible and not transitory. For example, we heard from Kraft Heinz, who said that people must get used to higher food prices. Yep, food prices are not going down. They're going to continue to go higher and higher and higher. But rest assured, folks, a few cents more for ketchup, not a big deal, right? If you can't afford it, just drive by the drive-thru of any fast food establishment and ask them for free ketchup. They'll give it to you. You see, we don't have an inflation problem here. It's all imaginary. It's all in your head. You gotta get in with the program. Stop questioning things. Stop complaining about inflation. We need inflation to make our overlords and dear leaders richer. So the real estate assets go higher, their stocks go higher. And of course, that will come with a small price to pay for average consumer. You know, like paying more for food. No biggie, no problem. Who needs food anyways? Find something cheaper than food. Eat something else. Because food prices are surging higher. Across the globe, global food prices hit their highest level in a decade. Ta-da! With U.S. seeing prices of meat, poultry, fish, and eggs rocketing by 15.7% in 2 years, as experts warn soaring energy costs could drive them even higher. Prepare for starvation. Not in the US, of course. If you're in another country, yeah, prepare for starvation. If you're in the US, we're good. We have an unlimited supply of Oreos, so we're never going to go hungry. The United Nations Food and Agriculture Organization Food Price Index reached a 10-year high last month, reflecting skyrocketing worldwide food prices. Globally, the price of vegetable oil increased by 60% during the past year. U.S. shoppers are also experiencing sticker shock, with the price of bacon up 17%. And beef costing meat-eating consumers an extra 12.2%. Experts are attributing the rising costs, on rising energy costs and other factors, including the Fed printing machine, printing coke out of thin air to grease up stocks and real estate values higher and make the rich richer. There is a price to pay here, folks, if we want to make our dear leaders and oligarchs, or big tech oligarchs, richer. And this cost is food prices will go higher. But on the bright side, we need to lose weight anyways. So a little starvation here is not bad, right? So long as our dear leaders get richer. And of course, this is leading inflation expectations among consumers to rise to all-time highs since the New York's Fed survey's inception, for both the 1-year expectations and the 3 years expectations, all rising above the BS 2% target in the Fed. The good news for now, inflation is also touching our wages for now. Of course, but you have to understand, every dollar you make, you're going to pay 2 extra in rent and living expenses. This is the beauty of inflation. But for now, our wages are rising higher. We got options. Look at our crypto gains, bro. Look at our stocks gains, bro. Look at our OnlyFans gains, bro. Look at our Twitch gains, right? We got options, and we're leaving. We're saying goodbye. We don't want you anymore. We don't need you anymore. Of course, until our tulips and stocks gains crash, and then we're gonna be desperate once again. But for now, we're leaving in droves. A record number of workers are quitting their jobs, empowered by new leverage. 4.3 million people left the job force in August, and this is an equivalent of 3% of the entire workforce. 892,000 employees quit in the food and accommodation businesses. 21,000 jobs were lost in retail due to employees quitting. 534,000 employees quit in the health and social assistance businesses. This is a major disaster. People are leaving in droves. We have a labor crisis in America. And there are many angles, of course. When you print free yayo out of thin air and you throw it all over the economy, everybody's a winner. Everybody has options not to work. On top of that, we have an organizational management crisis in America, where employers are not appreciating their employees. They're treating them as animals, underpaid, overworked, no appreciation whatsoever. People are frustrated and they're leaving the job force in droves. And this is, of course, pushing wage inflation higher and higher and higher. And what goes around comes around. If there is a shortage of truckers, employers are going to have to offer more money, hike up the wages and the benefits for truckers to attract new employees. That extra cost, along with the increased cost of energy, will be passed down to the end consumer. You and I, baby, we're going to pay more for everything. So you might want to clean up your disgusting feet, polish it, clean it, because worst case scenario, you might want to need to sell pictures of your feet online to make a living. And on top of that, in the morning, we got the jolts. The jobs openings, they went down by about 1 million jobs. And there are many interpretations here. Some people are saying that the pace of hiring is speeding up. What does that mean? The next jobs report will be hot, and perhaps the Fed will be forced not just to taper, but to increase interest rates. Another interpretation of the number is that employers are giving up. Small businesses have millions and millions of jobs openings. Nobody's interested, and therefore they're just removing those jobs out of the market. Nobody's interested. We don't have a business anymore. Goodbye. And therefore, stagflation. Inflation rising higher, the pace of economic activities and hiring and jobs creation is going down. And here's a guy promoting some FUD. He says, or she says, I don't know their gender, but they say, I'm a California dock worker facing record cargo ship backlogs. It'll be catastrophic if things get worse. Wait for it. It's about to get worse. And even corporate America is complaining now. Here's a little hint for you, by the way. We have corporate earnings about to hit the dock. In the next few weeks in the stock market, you will see that these margins are shrinking and shrinking and shrinking due to inflation. And this will be the final nail in the coffin of this freak show of a market. And the so-called bull rally, which is actually the cocaine rally, is going to come to an end. The music is going to stop. For example, we have Fastenal CEO, which is a classic inflationary stock, by the way, but even this stock is not doing well right now because inflation is raging out of whack. Inflation has shifted to brutally high for massive in 3 months, according to Fastenal's CEO. But perhaps this is the most important take. Chief Executive Lars Florence said the chaos caused by high inflation has taken an immense toll on human capital. Ta-da! You wonder why they're quitting? Well, now you know. Even the IMF is now warning inflation is not transitory. Once again, not transitory, folks. Start to panic now. IMF cuts global growth forecast amid supply chain disruptions, pandemic pressures. The group also raises its inflation outlook, urging policymakers to stand ready to take swift action. By swift action, they mean nuking the whole thing. Nations must be, quote-unquote, absolutely vigilant about inflation, says IMF. By vigilant, does that mean stopping the printing machine? Because this is the only remedy we have. You know, the tools, right? Toolman Jerome. He got the tools. One of these tools, perhaps the only tool left, is to nuke the entire thing. Nuke the stock market, nuke the economy, and let's start over. And inflation goes away. Poof. Gone. Why not? I mean, Fed presidents already dumped at the top. From Jerome to Kaplan to Rosengren to Clarida to all of them and the Wall Street buddies. They dumped like never before. Look at the Waltons, Zucchiniberg, Google founders, you know, the two guys that we forgot about. Even Tim Apple made a massive dump back in August. They're all jumping the ship. The rats are jumping the ship. And we, the dummies, are going to be left holding the bag here. Bloomberg says we have a supply chain crisis. What is causing the supply chain crisis? Increasing demand. I wonder what's causing that increased demand, by the way. Container shortage, port congestion, factory shutdowns, and worker shortages. And I say all of that is garbage. Let me fix it for you. Here it is. The supply chain crisis. What's causing it? The answer is the Fed's cocaine. Bloomberg also says this holidays shopping season will be costly. What is driving prices higher? High shipping costs, rising material costs, and components shortages. And I'm going to fix this one too for free. Here it is. What's driving prices higher? The answer is the Fed's cocaine. Again, there's no such thing as supply chain bottlenecks and shortages and all of that garbage. You print coke out of thin air, flooding the system with liquidity, it's gonna cause inflation because the demand is out of whack and the supply, even if the Martians start supporting China and producing more products for us, it's not gonna be enough because the demand went to the stratosphere and you need to slow down that demand. The only way you can slow that demand is hiking interest rates higher. The problem is we have a zombified economy, not just here, but globally. If you jack interest rates higher, the whole game gets nuked. The entire planet goes on fire. And the Martians can see us, by the way, on fire. And they're not going to help us, by the way. They're going to say, you know what? To hell with these dummies. Let them go, right? Let them get swallowed by the sun so we can get closer to the sun. And Mars becomes warmer. And then the ghost of Elon Musk can actually survive Martian climate. Today we heard from Fed Zombie, the vice chair, Clarida or Clarida. It doesn't matter what the pronunciation is. Both mean criminal in Italian. And of course, Mr. Clarida, the insider trader that he is, maintains that elevated inflation rate is largely transitory. Clarida, wake up. The largely transitory, that was the playbook back in August. The playbook right now is, holy shit, we f***ed up. And of course, Clarida says the conditions required to begin tapering for the Fed bonds buying program, aka the cocaine operation, have all but met. Of course, this is the mental gymnastics, dancing with words. What does that even mean? All but met. That means nearly met. It depends on your point of view, which means we can keep the coke or we can cut the coke. They're playing this game, kicking the can down the road over and over and over again. And before you know it, they will find themselves in a corner being forced not just to taper, but to raise interest rates. I promise you. And of course, Clarida says, I did not do anything wrong here. I did not engage in any insider trading. I did not sleep with that woman. I did not pick up all these hitchhikers in my VW with no door handles. I never did any of that. Have you forgotten that in the United States of America, corruption is legal? The VIPs, we didn't do anything wrong. Our rules, the rules that we made up, say that we did not commit any crimes. Be nice to make your own rules, right? Let's have the purge. Wait till the cops start to quit over these job mandates and the purge will become reality. But perhaps we can get some sanity from Atlanta Fed Boystick, who's also hoping that he will be or become the next Fed chairman. Because Mr. Boystick was speaking today and he said things he's not supposed to say. You see, Clarida is a good old boy. He follows the playbook, although he needs an update on the playbook. But regardless, Boystick is trying to be rebellious here, slipping all over the place, telling the truth. What are you doing here, Mr. Boystick? Stick with the playbook. Inflation doesn't exist, and even if it does exist, it is transitory. And if it's not transitory, we got the tools. Remember the tools? Raphael Boystick says there is significant uncertainty about how long inflationary pressures will last. Oh, you think? Fed Boystick says transitory is a dirty word. The T word. We're not going to use it anymore. As inflation lasts. The Atlanta Fed chief says price pressures are broadening. Wow, we didn't see this one coming. And here it is, folks, the big bomb. Atlanta Fed Boystick says high inflation will last a while, and it is no longer transitory. It's over. It's done. We wave the white flag. We are wrong. We f***ed up, and inflation is not transitory. Is there a price to pay for us, the VIPs? Of course not. Richer than ever? We dumped at the top? We're done here. The consequences are all for you, the masses, the village idiots. Boystick appears to break with other Fed leaders on how quickly U.S. inflation will fade. Now remember, Mr. Boystick has a certain ideology, and it's not better than Jerome Powell's, by the way. Boystick believes that we don't need a real economy, with jobs and small businesses and all that crap. We just need people to play the game.
This brings me to another area of criticism that some folks have leveled at the Fed, which is the idea that the Fed's policies do little to actually reduce the inequality in terms of employment. They do a lot to increase the wealth inequality, which is increasing folks' portfolio prices, increasing stock prices, increasing housing prices. And that exacerbates the unevenness and the inequality of the economy.
In order to play in that game, you have to have assets. If you don't have a job, there's no way you're going to get to assets. I want our institutions and I want our policies to work in a way that many more people get jobs than have historically, because then they can actually start to build those assets.
Absolutely.
So they can be in that game.
And of course, according to Mr. Raphael Boystick, you don't need an economy. You don't need to create jobs from a bottom-up approach. We don't need small businesses. We don't need affordable housing. We don't need decent wages. We don't need any of that. All what you have to do is find yourself a job and use that money to play the game, aka the stock market, the casino that we have created for you. I mean, look at us. We're doing it too. We're buying shit that we're pumping higher, and you should do it with us. Play the game. We made this casino for you. We rig it higher. We manipulate the stock market higher by a minimum of $120 billion a month. And this is making the rich richer. And Boystick says, why don't you join us? Join the rich, baby. Have a job, use the money, play the game. Boom, you're rich. And he's not wrong, by the way. The problem is this the kind of economy that we want? Or do we want a bottom-up economy? The American dream, affordable housing, small businesses, organic job creation in the economy. Oh, and by the way, Mr. Boystick, give me one shred of evidence that printing all of this coke and greasing up the stock market higher and higher and higher, give me one shred of evidence that this actually creates jobs. Because so far, you guys spent trillions and we have yet to recover the unemployment rate and the jobs that we have lost pre-pandemic. So again, Boystick, when you say play the game, I say, where are my chips? Where are the chips, bro? If I don't have a job, I don't have chips and I cannot play in the casino. Of course, Boystick would say, take it up to Joe Biden. We tried, we printed trillions out of thin air, and the job market doesn't want to recover. Take it up to Joe. President Brandon, let's go. President Brandon would say, okay, here's my solution. I'll give you chips via stimulus and aid programs, UBI, a digital wallet that the government will make for you. And if you're a good old boy, if you're up on your shots and you follow the rules, we deposit a UBI in your digital wallet, so now you have chips and you can play the game. Problem solved. But if you thought Boystick slipped and told the truth, wait till you hear from our favorite president, Fed president that is, Jim Bullard from the St. Louis Fed. Because Jim Bullard has the habit of smoking certain substances, he gets high, he goes on TV, and he says the craziest shit ever. And he slips and tells the truth.
We saw the short end of the yield curve move higher today, really in reaction to the same thing happening over in Europe yesterday whilst US bond markets were closed, as there was talk that we might even get a rate hike this calendar year from the Bank of England. When you see those sorts of moves, does it at the margin help the US's cause in the sense that there's a bit of tightening going on without you having to hike rates, or is the opposite true, that if other central banks get going before you, it might force your hand?
I don't know if there's any sort of direct feedback there. I think the Bank of England has to handle their situation. They're a more open economy. They've probably got other concerns other than the ones we have here. Inflation tends to be higher in the U.S. here than other places in the world. And I think part of that is that the fiscal and monetary response to the pandemic has been so aggressive in the U.S., and so that's probably feeding in. You know, one thing I would say, a lot of people say, well, inflation's up because this is a supply shock. But what I would say to that is that a supply shock alone cannot cause inflation. It's a supply shock being accommodated by very easy monetary policy. It's those two things together that lead to the inflation. You can't get inflation just by having one price go up. It has to be all the prices go up in tandem. And that only comes about when the monetary policy is accommodative in response to a supply shock.
And here is James Bullard admitting that inflation wouldn't be rising on supply chain bottlenecks alone. It is rising due to the accommodative Fed policy, aka the Coke. The coke is stimulating the demand, and the demand is overwhelming the supply chain, causing these bottlenecks. If the demand eases, no more supply bottlenecks. Therefore, we have legendary economist Milton Friedman. He doesn't even believe in supply push inflation. He believes that inflation is always a monetary phenomenon. And I don't know if you missed it, but the Englishman asked him a question. He said the Bank of England perhaps will start hiking up rates this year. Will this be a guide for you guys at the Fed to follow? Meaning you will be forced to raise interest rates before you anticipated? And of course, Jim Bullard ignored the question, but here comes the Englishman with another shot.
That said, are you fearful in any way that the inflation picture will force your hand before perhaps the jobs picture on its own right would warrant tightening?
Look at Bullard, all dazed and confused now. Why is he asking this question again?
Yeah, I don't know. On jobs, unemployment rate 4.8%, way more job openings than the number of unemployed. On that dimension, where we've got a hot job market.
So he's going to go on and bullshit for a while to avoid and dodge the question. But here's the real answer. Yes, we will. We will be forced to raise interest rates abruptly and nuke the game. Next, we have the Southwest story. And overnight, we got a development from Texas because Governor Abbott of Texas pretty much banned all jab mandates in the state of Texas, which happens to be the headquarters of Southwest. And this, of course, will complicate things because we have Texas versus Biden. And this morning, the CEO of Southwest did an interview on CNBC, and he was sweating bullets, trying to bullshit his way out of the truth and the real answers. But regardless, he said that he is not a fan of these mandates, but Biden forced his hands to do it. And he continued the bullshit, of course, saying that the delays were due to the weather, and the weather in Florida was bad, and magically continues to be bad, even though the folks in Florida say there was no problem with the weather. It was normal. So next time you get caught by your teacher not doing your homework, don't say the dog ate your homework, because this is an old one. Everybody knows it already. Use the weather in Florida. I did not do the homework because the weather in Florida, even though I live in Alaska. So which side will Southwest CEO choose? Is it going to be the side of Texas Abbott or Joe Biden? For now, Southwest CEO says we're going to go with Biden. I got $20 on Biden versus Abbott, because Big Brother always wins. And here is the last story of the day, and of course it ties up with the jab mandates and the Southwest story, because we know that the jab mandates are probably a beginning stage for a social credit system. If you're a good old boy, if you follow the rules, you do what the dear leaders ask, your social credit goes higher. And if your social credit goes higher, you get a better capsule. They upgrade your capsule, and they add a few more fazools to your digital wallet, and your UBI goes higher. But if you are rebellious, your social credit goes down. They lock your capsule, your UBI goes down, and now you need therapy. We need to reprogram the chip in your brain because it was supposed to tell you to be obedient. Even Santa is going to work for the government now. If you're a good old boy, you get a gift in Christmas. If you're naughty, we lock your capsule and your UBI goes down. Your social credit goes down. And you know how you can be naughty? By eating meat. Yep, no more meat, folks. If you eat meat, your social credit goes down because you're not friendly to the environment. Prices of red meat are raging out of control. And the reason is we have a climate crisis. The climate crisis is causing droughts and frosts all over the place, damaging crops. And when we don't have crops, what are the cows going to eat? They're not going to eat Oreos. Those Oreos are emergency measures for us. That's the last resort for the human being. When cows don't eat, we have to, how do I say this nicely? We have to butcher them, but not to eat them, just to get rid of them. And therefore, we have fewer cows, and fewer cows mean higher meat prices and higher milk prices too. I know what you're going to say. I don't even drink milk, bro. No dairy for me. I drink oat milk. Well, guess what? Oats prices are surging higher. Out of whack. So even your environmentally friendly milk is going to get higher and higher and higher in price. The overlords say we must treat beef as the new coal, the new oil, big oil, and we have to crush it down by more regulations and more ESG initiatives, which actually pushed the price of energy higher, not lower. There's a price to pay, and perhaps it is worth it to clean the planet and greenify the country. We have to live with higher energy prices. And the overlords say we have to treat cows the same way we're treating oil, which will push the prices of beef higher and higher and higher. Red meat is about 35 times as damaging to the environment as a bowl of greens, according to a study published in 2019. Now, I've already discussed my plans to become a vegetarian, not a vegan, vegetarian. And the reason is I'm going to still eat eggs and cheese, but I'm going to have my own chickens and cows in my farm, my property in Fallbrook, California, which I'm planning to purchase, by the way, and retire. And my goal is to eat whatever I plant and whatever I produce in that property. The problem is my plans are on hold because we have Governor Kim Jong-un Newsom, and he continues to destroy the state by the day, and therefore maybe I'll look for property out of state. Most important condition is it must grow avocados. And of course, my reasons to become vegetarian is I feel bad for cows. I feel bad for pork and chickens. They're so cute. How could you kill them? When I look at a piece of pepper, I don't feel anything at all, even though the pepper is screaming. And what is behind the climate crisis, by the way? Because it all ties up together. Why is the weather heating up, damaging crops, and therefore we're having less feed for cows, and we have to euthanize them? Well, it all ties up together here. We have an ecosystem because apparently cow farts are responsible for heating up the planet. And if we can control cow farts, we're not going to damage the crops, and we're going to have more food for more cows, and then they fart more. Wait a minute, that's a bad plan. But the plan is, how about cow diapers to control the gases? Or how about a new diet like seaweeds? Maybe that will do it. Or how about we give them a ticket every time they fart, the cows? Of course, the real problem that nobody wants to discuss is the fact that the planet is overpopulated. We have billions and billions and billions of people, and all of them are farting together. How come that's not a problem? Why are we picking on the cows, the poor cows? I mean, look at the cow. She's looking back at us and saying, have you ever tried to smell yourself, bro? You're complaining about my farts? Let me fart in peace. Leave me the alone. And with that, folks, we're moving on to the markets coverage today. And here we go. The Dow Industrial Average closing in the red, down 117.72 points, or a decline of 0.34%. The Nasdaq down 20.28 points, or a decline of 0.14%. The S&P 500 also down by 10.54 points, or a decline of 0.24%. What about the sector's performance today? Leading the pack at number 1 and capturing the gold medal, REITs. At number 2 for the silver, utilities. And at number 3 for the bronze, consumer cyclicals. Meanwhile, the laggard of the day, communication services. Now, REITs and utilities are leading the market higher. The defensives, the yield alternatives. They've been suffering as the 10-year treasury moved higher. The yield for the 10-year treasury moved higher. But now, at least for today, the 10-year yield went down, while REITs and utilities rebounded higher. The big question is, do we have a top in yields? And if we do, then we are closer to a bottom in the market. The problem is we have the CPI and the PPI coming out this week. We cannot make a conclusion that the 10-year yield indeed topped. What about the advance to decline ratios? What's going on here? NYSE 57% advancing versus 39% declining. The Nasdaq 58% advancing versus 38% declining. Moving on to futures. What's going on here? Muted activities in crude oil futures, both the WTI and Brent pretty much at the flat line. Meanwhile, natural gas prices went down initially in the morning, but they rebounded higher once again. The relentless rally in natural gas. What about softs? We have massive gains for coffee futures. Likewise, we have a rebound in OJ futures, while we have declines in lumber, cotton, sugar, and cocoa futures. The big question is the rally in cotton over? Do we have a top? This is extremely important because we will get the CPI and keep an eye on the CPI, specifically when it comes to apparel prices. What about metals? What's going on here? Gold rising slightly along with platinum, yet we have declines in copper and palladium. What about meats? Watch out for these prices. Live and feeder cattle futures, calm for now, keyword for now. You know, they say treat beef as the new coal. I say treat beef as the new big tech. Speaking of the big tech, what about lean hogs? Down more than 2% today. Perhaps the title of the new big tech will move from lean hogs to beef. What about grains? What's going on here? We have declines across the board, with exception of wheat futures rising higher by about half a percentage point. On the other hand, we have declines here led by oats, canola, soybean oil, soybeans, corn, and soybean meal futures. Rough rice, pretty much on the flat line. Moving on to the big casino, the options market. What's going on here? Leading the pack at number 1, Tesla, the souffle, with about 1 million contracts. About 42% of those were calls. We have interesting action here in Tesla options. Wait for the chart analysis and I will share the findings with you. But here it is at number 2, Apple, with about 1 million contracts. About 68% of those were calls. At number 3, the ticker SOFI for SoFi Technologies, with about 600,000 contracts. About 83% of those were calls. What about the unusual activities that took place in the options market today, starting with the ticker AMRS? This is a biotech company that produces components for beauty products. They're bidding for the name to rise higher here by buying the 13 calls with expiration date November 19th, with the expectations that the name will pop higher by more than 6% or so by then. They paid about 1% apiece to enter this trade. All in all, spending about $1.5 million. What about the trade for the ticker NTES for NetEase? They're making a bearish bet here by buying the 90 puts for the expiration date November 15th, meaning this upcoming Friday, with the expectations that the name will drop by more than 5% by then, and they paid about 80 cents apiece to enter this trade. All in all, spending about $1 million. What about the trade for the ticker MU Micron? The name was down big today, but somebody's betting for a rebound here by buying the 71 calls with the expiration date 29th of October, with the expectations that the name will pop higher by more than 6.5% by then. They paid about 42 cents apiece to enter this trade. All in all, spending about $300,000. What about the trade for the ticker SPY for, you guessed it, the SPY, the S&P 500? Somebody's buying protection here, the 400 puts for the expiration date November 15th, with the expectations that the SPY could drop by more than 8% by then. They paid about $2 apiece to enter this trade. All in all, spending about $1 million. Now, this trade will give you protection if the SPY drops by more than 8% all the way till November 15th. $2 a piece, it is worth it, and you get a peace of mind. Continuing with interesting trades, what about the trade for the ticker mRNA, Moderna? We have bad news from Moderna today because the FDA did not recommend booster shots from Moderna. We also have news from Scandinavian countries banning the use of the Moderna jab for those under 30. Apparently these Scandinavians, the Danes, are just Trump supporters with their conspiracy theories. But anyway, somebody's betting for more downside for Moderna by buying the 250 puts for the expiration date October 22nd, with expectations that the name will crash by more than 20% by then, and they paid about $1 apiece to enter this trade. All in all, spending about $300,000. What about the trade for the ticker TGT, Target? They're buying puts here big time, perhaps betting that these supply chain disasters will impact the sales of Target this holiday season. And they bought the 200 puts for the expiration date November 19th, with expectations that the name will drop down by more than 13% by then, and they paid about $1.25 apiece to enter this trade. All in all, spending about $400,000. And what about the trades for the ticker FIVN59? We have a strangle trade here. They're buying the 155 calls. They're also buying the 135 puts. The name surged higher today. Somebody's betting for a large move to come. They're not sure if it's going to be to the upside or the downside. So they're buying calls and they're buying puts. At the same time, for the expiration date, November 19th, they bought the 155 calls and they also bought the 135 puts. All in all, they paid about $9 a piece for this trade. They spent about $2.7 million. What about the trades for the ticker HD Home Depot? This is a credit spread, a put spread. They bought the 320 puts and they sold the 315 puts, all for the expiration date of December 17th. They paid about $7 a piece for the 320 puts, and they received in credit about $6 a piece from selling the 315 puts. All in all, they spent about $1 a piece for this trade, and the total was about $300,000. They're risking $1 to make 5. This is the maximum profit for this trade, $5. So they are risking $300,000 in hope to make $1.5 million. Moving on to the heat map analysis. What's going on here? I'm seeing a lot of short covering here in the names that went down the most. Ahead of what? Number one, the CPI print. If the cooks give us a cold number indicating that inflation went down, we know it's comical, but it doesn't matter. The market will believe it, yields will go down, and the market will bottom. The other thing is we're waiting for options expiration on Friday, and therefore we're seeing a lot of short covering before the big number, the CPI. And we're talking about names that went down the most in the last few weeks. Names like Nike, Airbnb, the high beta names. Lots of short covering here. And another theme is the ESG theme, with electric vehicle makers surging higher, be it Tesla, Ford, GM, along with solar stocks also rising higher. And these are all hopes that your deal leaders are going to come up to an agreement, a budget plan, including an infrastructure spending bill, which will be heavily favorable to solar and EV manufacturers. Moving on to the charts analysis, starting with the SPY 30 minutes chart. What's going on here? The chart continues to melt. It closed below the support of 434. This is a bearish signal, not a bullish one. But again, it will all depend on the CPI print. If the print comes out cold, the market will rally higher. If it comes out too hot, then we get a problem, because the market will start shifting from tapering to raising interest rates. That perhaps tapering is too late. It's not going to do anything right now. Perhaps we need to start thinking about raising interest rates. And if that happens, goodbye market. The next support is 430. The resistance remains 438. I'm not going to call 434 as resistance for now because we are barely below the number. But just looking at the chart right now, melting down, the risk is to the upside. The risk right here is if the CPI number causes short covering, then we will see massive green candles in this chart. Moving on to the daily chart for the continuous contract on the SPY. We have a triple rejection here from the descending sloping line of resistance, and the chart continues to struggle to break above that line. Now again, the risk is to the upside, not the downside. So the bulls have a lot of hope behind them, specifically from the technicals. The fundamentals are on the side of bears. The technicals are on the side of bulls. The bears have to be careful here from becoming too greedy because the momentum indicators are bottoming. They are trying to cross in the MACD. And for all you know, this could be an ABC pattern. And the SPY will gather the energy and it will be able to break above the sloping line once and for all and reclaim 4,384.5 for support. There was another scenario for the bulls here. What if this a cup and handle formation, and it is just a matter of time before the chart works its way and breaks above the sloping line? Of course, the bears would say that the momentum remains on their side. The expectations are for a hotter CPI print, and therefore we haven't seen the end of this correction. Now notice that the bears argue with the fundamentals, but the technicals remain on the side of bulls, at least for now. We're waiting and waiting and waiting for a pop higher, but this will not happen until yields and the dollar top. What about the Qs, the Nasdaq? What's going on here? Similar story, melting down, and the meltdown continues. The support remains at 352, the resistance at 360.5. The problem is the consolidation right now is in a bear flag pattern, suggesting that the chart could go down to revisit the support of 352 and take it from there. What would be the catalyst, by the way, for the chart to go down to 352? The answer is a hotter CPI print, pushing yields higher, prompting Nasdaq futures to react by taking another leg down. And here is a chart of the continuous contract for the Nasdaq. It is more worrisome than the SPY because, unlike the SPY, the momentum indicators on the Nasdaq futures are weakening. And I told you, watch out for the MACD indicator. If it starts to curl down again and you see the red columns on the histogram getting longer and longer and longer, watch out. We have another leg down that will take us all the way to a minimum of 14,000. And unlike the chart of the SPY, the bears have a technical argument on their side, the double top formation at 15,000. If you zoom in for a 30 or 1 hour chart, you will see that the chart got rejected twice from 15,000 and therefore the double top. The bulls will counter by saying perhaps this is an ABC pattern. The chart went twice, knocking at 15,000. Third time is the charm, but we have to go down to gather the energy to bring in the dip buyers, and then once and for all, we will break above 15,000. This better happen as soon as tomorrow, by the way. Otherwise, there is no C leg, and the chart will flush down all the way to 14,000. Moving on to the IWM 30 minutes chart for the Russell 2000. What's going on here? Still battling the resistance of 223 over and over and over again. The problem is the chart is making lower highs, so we have a descending, sloping line of resistance. You want to watch for this line. A break above the line will mean that the chart gathered the energy needed to break above the line and the resistance of 223. So go to your chart and draw the same line. This will be your guideline. If you have a break above the line, you go along the IWM. However, if the chart makes another lower high, but most importantly, a lower low, then you have a confirmation that you should go short with the destination of 218 as support in mind. Moving on to the Dixie, a daily chart. What's going on here? Still popping higher. We have an ABC pattern. It has a destination here. It is eyeing a number. For now, the number is 94.7, but perhaps the dollar wants the round number of 95. The problem is, tomorrow is a decisive day for the dollar. Why? Because we have the CPI print. If the CPI print is too hot, then the assumption is tapering will happen aggressively, not just sooner. We're talking about aggressively now. And if it does, then the value of the dollar will surge higher. On the other hand, if the cooks give us a cold number, then the dollar will top. And if the dollar tops, then we have a sign and a signal for a market bottom. And by the way, I shared this article with you from Bloomberg. And the article reads, everyone's a dollar bull as taper makes U.S. currency a top bet. What happens when everyone is on the same side of the trade? It is a psychological sign that the opposite will happen. And we are nearing a top in the US dollar. It could happen as soon as tomorrow, by the way. And where does this leave us with gold? Gold still holding. Still struggling to break above the Fibonacci resistance. But again, I'm keeping the bull flag. I think gold here is readying for a pop higher. It has been holding and holding and holding regardless of the triple enemy. Rising higher all together. The dollar, the 10-year yield, and Bitcoin. If the chart can speak, it will say, I don't care about what the dollar is doing. I don't care about what yields are doing. I don't care about what Bitcoin is doing. I'm going higher. I'm eyeing a pop higher. I'm done here being beaten down over and over and over again. And I'm ready to pop higher. I just need a signal. I need one spark. And this spark will be a top in the dollar or a top in yields. And here's the chart of the 10-year yield. Do we have a top? Is the ABC pattern over for now? Let's clean the chart, and here it is. It looks as if we're topping for now. The MACD indicator is curling down. The RSI is at an overbought zone. Is this a signal that we have a top? It is not, but we're getting closer and closer and closer. Of course, everything will depend on the CPI, aka the CPI. And what about the TLT weekly chart? Popping higher. For now, the candle turns green. It was looking bad on Monday and Tuesday. Now it is starting to look good. That perhaps it's not over for the TLT, even though we have a confirmation on the weekly about the weakness. So is this pop transitory for a day or two and then yields pop higher again? Certainly the weekly charts are suggesting so, but the daily, for now, at least for today, are favoring the TLT versus the TBT, tracking the 10-year Treasury yield. Moving on to the VIX, what's going on here from a 4 hours perspective? You and I have a secret indicator here, looking at the MACD for the VIX from a 4 hours perspective. Every time we have a crossing in the MACD, creating green impressions on the histogram, we see a double-digit gain for the VIX coming hand in hand with a drop in the SPY. If this holds, the VIX is predicting that the SPY will trade down tomorrow. Of course, it is too soon, but you will know right away overnight and specifically right after the CPI print. Watch how the VIX behaves. If it creates more columns, green columns, then we have another pop coming here in the VIX from a triple bottom support, meaning that the pop will be aggressive if it happens. Moving on to Apple, what's going on here from a daily chart perspective? Still in a bull flag consolidation. It is melting down, the flag that is, or we're not going to have a confirmation until and unless we have a pop and a closing, at least from a daily chart perspective, above 145. Absent of that, the ultimate destination for Apple is going down to the lower end of the trading channel, which will be a top to bottom correction of about 15%. Of course, the iMob released today their Unleashed event, whatever that is, perhaps new colors, another shade of orange. And we now know that this is a distraction because after the bill, they released the real news. They are having a chip problem which will reduce the outlook of production for the iPhone 13. Tesla, the souffle 30 minutes chart, what's going on here? Again, bucking the trend, rising higher. The culties don't say that Tesla is an automobile manufacturer. It's a technology company. Well, it's not trading as a technology company because tech stocks are down. It is trading along automobile manufacturers, Ford and General Motors, on the EV optimism that the new infrastructure bill will have a lot of spending, billions and billions and billions of dollars in EV infrastructure. The problem is we know that the Biden administration will reward GM and Ford, the union companies, not Tesla. So the stock for now is moving via options trading. And here is an important finding. When we look at the options grid, for example, the expiration date of this Friday, the 800 and 810 calls have about 50,000 contracts in open interest. On the other hand, the 750 puts have over 100,000 contracts open right now. What does that mean? These people are holding the bag and somebody wants them to hold the bag. Because if Tesla trades below 750, the market maker will have to deliver when these contracts are exercised. And they deliver by buying an enormous amount of Tesla shares. They want to avoid that. They also want to avoid delivering for those with calls in the 800 and 810 level. What does that mean? If I had to guess, I would say the market maker wants to park Tesla by the end of the week, options expiration, anywhere between 750 and 800. This is the sweet spot, the maximum pain spot, with the majority of open interest expires worthless. And oh, by the way, another whammy for the souffle and other EV manufacturers is the price of lithium. You thought it's dead, and now it's coming back from the dead, surging higher. And this will be an added input cost for all of these EV manufacturers, along with other costs from materials to labor rising higher due to inflation. Moving on to BTC tulips, what's going on here? The momentum indicators are topping, yet the momentum remains strong. What does that mean? It means the chart should top right here, at least for now. We should see some profit taking, creating a dip, and then it depends whether we're going to have dip buyers or not. On the other hand, we have the FOMO element adding to the momentum. A lot of people missed the boat at 40, 45,000. Now tulips are trading at around 55,000, and everybody's eyeing all-time highs. BTC will reach 60,000, 70,000, 100,000. You don't want to miss this rally, and therefore the FOMO. So it is a battle between the technicals, which say the chart should top right now, and we should see profit taking, versus the FOMO element, suggesting that we are not through with the mania yet. We're about to see another massive pop higher. Which scenario will it be? Let me know in the comments. And lastly, what about AMC? What's going on here? We have the triple top, and the chart, if it closes below 36.5, will be a shorting signal for me, indicating that it's over and the chart will flush down. Any crossing above 39 will indicate that the chart remains healthy and we have more upside to come, indicating you should go long. Of course, it is a battle of options here. Options expiration on Friday. There is a sweet spot where the market maker wants to park the chart to make the majority of call and put options holders hold the bag. Lastly, we're moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have the CPI, aka the CPI, and the cooks will be busy in the morning. There is no room for error here. If you're going to cook the number, you have to cook the whole meal. No details missing, like the cooks did with the jobs report last time around. They forgot to cook the wage inflation out. They forgot to cook the unemployment rate out of the meal. This time around, the CPI must deliver. Otherwise, Powell and company are doomed. And with that, ladies and gentlemen, I'm done here. Thank you for watching. Thank you for listening. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe. Press the like button, the notification button, and follow me on social media.